Now, liquor major United Spirits Limited announced that sale and franchising of over 30 popular brands to in-brew beverages for an estimate of 820 crore. Ashesha joins in with the details. Ashesha.
Hi, good morning. So yes, first up, it also reported its numbers and broadly in-line set of numbers coming in line with consensus estimates. Net sales is down 16% on a YOY basis and up marginally by about 10% on a sequential basis. Margins have contracted a tad bit. They've come in at 17.5% versus 17% on a sequential basis. On the profit after tax front, it has almost declined by 19% on a sequential basis. This was driven by consumer demand in both off-trade as well as on-trade channel. Margins, however, were impacted due to inflationary pressure. However, additionally, they've also announced strategic review of their popular brand. Now, just to give you a brief background, in February 2021, they had announced strategic review of select popular brands. It was scheduled to be completed by 31st of December, then pushed to 31st March, and finally now it has come through. The objective is to focus on premiumization and to help deliver their growth mission, which is sustainable double-digit growth every year. They've entered into two agreements, one for sale of 32 brands to in-brew beverages for around 820 crore rupees, and the deal is expected to be completed by the 30th of September. Secondly, they've also entered into a franchise agreement for 11 other brands for a period of 5 years, and during the period of 5 years, the buyer can actually either convert this fixed agreement into a perpetual agreement or buy those brands. So these are the two options the buyer has. The con call is scheduled to happen at 10 tomorrow. Several unknown details with respect to the franchise agreement, what were the margins of these low brand products, and what will the resultant margin be now post the stake sale. So a lot of unanswered questions. Probably we'll get more clarity in the con call today, but as of now, a strategic review of USL has been completed. First, quickly, let me take you through the numbers. Their net sales for this quarter stood at around 2,435 crores, down 16% on a sequential basis and up a tad bit 10% on a year-on-year basis. EBITDA margins have come in at 17% versus 17.5% on a quarter-on-quarter basis. However, this was driven by strong demand coming in from both off-trade as well as on-trade channel. Margins, however, have been impacted because of inflationary pressure that the company was exposed to during the quarter. Additionally, they've also completed the strategic review of their popular brands. Just to give you a brief background about the strategic review, they've commenced it in February last year. They aimed to complete it by December. They've now finally gone ahead and completed. This is to focus on premiumization and additionally to deliver growth mission, which is sustainable double-digit growth year-on-year. They've firstly sold 32 brands from the popular segment for around 828 crore rupees, and this transaction is expected to be completed by the 30th of September. Additionally, they've also entered into franchise agreement for 11 other brands. And this is for a period of 5 years, and at the end of 5 years, the buyer has the option to either convert the fixed 5-year agreement into a perpetual agreement or purchase these brands. The con call is scheduled at 10 a.m. today. More details are awaited as to what the contours of the agreements are, what the proceeds of this particular sale will be utilized for. But as of now, the strategic review has been completed. And to just give you a brief background about the valuation, USL trades at around 11 times its book value, at around 70 times PE and around 6 to 7 times its FY22 sales. So all in all, numbers were in line with what we were working with, and strategic review for now has been completed.